It is great to be live again. It is Wednesday, June 18th, and it is a great day. The rain we've had for a couple of days has finally let up. I'm Tom Young. I'm here to share some information and message with you. I sort of titled today is Your Future Lifestyle at Risk. And what that means is the way that you live today. If you're living in a today mentality, I want it today, and that means that you're not really saving anything and projecting the future lifestyle that you really hope and want to have in the future. Start every program with a prayer. We pray for the world today. The fires are on and up around the world, whether it's Israel and Iran or Ukraine and Russia. It just, and in America with the riots across America, we pray for God's intervention. We pray for his help in sharing and creating understanding in men's minds, that he would come into being and guide men in their thinking and their decision making, protect our president, protect our country, protect all of our friends and relatives for what is possibly coming in the not too distant future, which could be a complete financial upheaval. I'll talk about that a little bit today in my podcast, but I want to talk about your future lifestyle. Your future lifestyle is at risk because of the decisions that you make today. Why do we make the decisions that we make? Because it's what we're taught to do. The financial world is very good at educating people on how they want you to save money, react, and do things in the future. The financial world has 4 basic rules that they live, work, and promote by. Number 1, I want all your money. They want control of all of your money. Number 2, they want more ongoing. So they want systematic payments directly to them. Number 3, they want to keep it for a long, long time. And number 4, they want to give back as little as possible. Those are the 4 rules. And you have to think about what you do, whether it's saving in your 401k at work. Well, let me ask you a question. Do you think taxes in the future are going to be higher, the same, or lower than they are today? With $37 trillion of government debt, do you really think the taxes are going to be lower in the future than they are today? Well, if they're not going to be lower, why is it a good decision to postpone paying the tax on money that you get control of it today, and postpone paying the tax till the future comes when you've already agreed that the taxes are most likely and probably going to be much higher than they are today? That makes no sense at all. The only problem I have with that is the 4 rules that I teach people to achieve true financial success and security in their future. My 4 rules are simple. You need to look at your gross annual income. If you make $100,000 a year, you should be saving $20,000 a year long-term savings. Rule number 2, you want to accumulate capital that you have complete access to equal to 50% of your household income. So in the example I'm sharing, if you made $100,000 a year, you want to have $50,000 in accessible capital. So that means you would never have to run a credit card balance. You pay them all at the end of the month if you use credit cards. I have clients that use credit cards to accrue points to pay for airfares, and they pay them off every month. Rule number 3, no consumer debt. Consumer debt is a killer of your future. Consumer debt is anything you purchase that you cannot pay for out of 30 days of income. Therefore, you have committed earnings you have yet to earn in order to pay for something that may very well be gone, worn out, or you don't even have it anymore. 80% of the automobiles that are traded in are underwater, which means they still owe money on the car that they're trading in and buying a new car and still paying for the old car at that point in time. So rule number 4 is you accept the responsibility of becoming the CFO at home. We are all chief financial officers of our household. of our income, of our family. You can get my book. Go to cfo-project.com, go overhead right there, to get my books, The Family Money Farm, The CFO Project, and Financial Mastery Coaching, The Blueprint. The CFO-project.com site has been all redone and remastered. There is a lot of unbelievable information there you need to get your hands on, and the books that are there. Now, if you're outside of the country, to get that book, you can go in and put your name and email address in, and if you buy up to the $37 level, I will send you an autographed copy of my book. But if you're out of the country, not in the US of A, it is a $25 charge to mail the book to you if you want a hard copy of the book autographed by me. So that's the way that goes. So anyway, we're talking about these 4 rules. Now, if I'm not putting money in my 401k, where am I going to save it otherwise? So what are my choices? I can put it in investments and assume risk. I can put it in a bank account and make very little interest on the money. I can put it into a cash value dividend paying mutual life insurance policy where I would have access to that money without the government, without taxes, etc. So that there are things to realize when you look at where do I store my money. The banks put anywhere from 15 on average to 20% of their tier 1 capital in life insurance policies. Now, there are 2 kinds of life insurance companies. There are dividend-paying mutual life insurance companies that are owned by the policyholders. And under the tax law, the profits each year are distributed back to the policyholders in what is referred to as a dividend. The companies I work with are all over 100 years old. They have paid a dividend every year since the inception of the company over 100 years ago, so they have been very profitable. If life insurance was not profitable, why are there 850 or so other corporations out there that are in business selling some kind of life insurance, competing and telling you that they are competitive? Well, as far as a death benefit, you could say, well, my policy's cheaper, but the only thing you get is you die, you collect. But if you want more than that, there are many, many, many other benefits inside a correct designed life insurance policy. Now, when I look at that, these 4 rules, you forfeit your future lifestyle with your current lifestyle. You need to have a budget. You need to manage your money, and you always pay yourself first. So if you went to work tomorrow and your boss said, look, you get to keep your job, but things are really bad, and we're going to cut everybody's pay, including the bosses, everybody's pay is going to be cut by 20%. Would you still go on? What would you do? Would you go bankrupt? You would figure out a way to lower your expenses to fit into the income that you're receiving. That's the nature of it. That comes down to a discipline issue. Are you disciplined enough? Do you want the future lifestyle bad enough? Do you want financial success bad enough? Are you willing to be coachable? Are you willing to read books that I would recommend that are going to give you a sound understanding of how this works and what the future would be? R. Nelson Nash created a book called The Infinite Banking Concept. And that, it's just a concept. And it's nothing more than understanding how you take control of the banking equation. In other words, the function of banking, you should be operating yourself from your household. An example, you're 25 years old. You just graduated college not long ago. You got your first really good paying job. Maybe you're still living at home. I don't know. But you go out and your dad co-signs for a $25,000 automobile. That is probably a used automobile today. You finance it for 60 months at 8% interest. Your monthly payment's $507 a month, and at the end of 60 months, you paid the bank $5,400 in interest. Now, that $5,400 in interest, had it been invested at 8%? When you are at retirement age, at age 70, that $5,400 of interest you paid to the bank would grow to $253,000. So I guess what did the car cost you? It cost you $25,000, cost you $5,400 in interest, so that's $30,400, and then another $153,000 on that. So you've now lost $187,000 in purchasing power, in future value. And that only puts you at retirement. You're going to live another 20 years beyond that. So that $253,000 is more likely going to be $400,000 to $500,000 over your lifetime. Do you want it back? Do you want it? I find so many people I talk to, they don't know what they want. Do you really want to be financially secure and successful? That's a decision that you have to make. Sign in, get my book, go to cfo-project.com. It's going overhead. Here it comes, cfo-project.com. Put your name and email address in, get my book, The Family Money Farm, The CFO Project, and Financial Mastery Coaching, The Blueprint, cover to cover. God bless you all. We'll see you here next Wednesday. I'm going to be on here every Wednesday between 11 and 12 o'clock. I had an appointment that ran longer today than I thought. That's why I wasn't on here right at 11. But we're going to continue this story and continue the financial education. The crash is at our doorstep. Basel III goes into effect July 1. If you don't know what Basel III is, look it up on the internet. Go to YouTube or wherever and find Basel III. Gold becomes the tier 1 asset of banks on July 1. When that happens, they will no longer need the U.S. Treasury bonds that they now hold for assets in their tier 1 capital account. Gold is going to replace that. BRICS, Brazil, Russia, India, China, South Africa, and a whole host of other countries are now creating a new gold-based currency to compete with our U.S. dollars. There are things happening all around us. You need to be disciplined. You need to start saving all the money that you can save. God bless you all. We'll see you here next week. Have a great day. Bye-bye.